Hi everyone, let's take a look at problem 12-5A, which deals with the liquidation of a partnership. Kendra, Cogley, and May share income and loss in a 3-to-1 ratio. The partners have decided to liquidate their partnership, and on the day of liquidation, we see their balance sheet, which appears on the screen sort of in this area here. Okay, now we have to prepare journal entries for the sale of the inventory, the allocation of its gain and loss, the payment of liabilities at book value, and the distribution of cash in each of the four separate cases. All right, so let's slide up and see if we can tackle Part A. All right, first we see that inventory is sold for $600,000. Now, when I do journal entries, I'd always do the easiest part first, and the easiest part on this one, I think, is the $600,000 debit to cash. Okay, now inventory was on the books at $537,200, so we need to write that off, right? And then the difference would be a gain. Since it's a credit, we have a gain rather than a loss. Proceeds exceeded the cost, and that's $62,800, and that would make Part A balance. Okay, now I've slid the screen. In Part B, we're asked to allocate the gain or loss, right there. Allocation of its gain or loss. Well, we had the gain on the sale of equipment. Oh, by the way, on Part A, I should drop that in. Gain on sale of inventory. And I said equipment by mistake. It's inventory. Okay, so now what we would do is we would need to transfer that gain, since we're liquidating to the partnerships, to the various partners' capital account. And the partners appeared in order as Kendra, Cogna, and May, right? And it was 3-to-1. So you need to take 3/6, right? 3-to-1 means if we add up the bases, we get 6 in total. So 3/6, Kendra is going to get half of that, or 31,400. Cogley will get 1/3 of that, or 29,33, right? And May gets 1/6 of that, or 10,457. Okay, 467, excuse me. And you might have to use Excel or a calculator to do those calculations. But that's how we allocate the gain. And on Part C, what does it say? The payment of liabilities at book value and the final distribution. All right, so the payment of liabilities. Let's slide back up. The liabilities we had on the books were accounts payable. So let's work on that next. Okay, accounts payable was equal to $245,500 right there, and we need to pay that off. So that really just means debit accounts payable for the book value, right? We're going to take care of all of our partnership liabilities, and we pay that off with cash, $245,500. And then we finally have to distribute the final amounts. And at this point, let's take a look and see what we have. Excuse me. Sorry about that. Let me slide back up. Part D says the distribution of cash in each of the following separate cases. All right, so we had $180,800. We sold and received cash of $600,000. Why don't we keep a running tally to make sure we're in line here? Let's just jot this down. Cash started at, shoot on back, $180,800. Right? Just do it this way. And I'm going to just call this beginning balance. Okay, then shooting back to the screen, we had a sale of $600,000. So we have an increase of cash of $600,000. And let me format this so everything will look about right. So that was the sale of inventory. Then we paid our liabilities. And the payment of the liabilities was $535. Okay, so our balance so far, if I just run a sum here, I think is $245,500. Oh, I'm sorry. We actually paid. I get my numbers reversed. We paid for our liabilities, which were equal to the 245,500. Let me shoot back and make sure. Yeah, there's the 245,500. Sorry, getting reversed everybody. Okay, and then the sum, the balance remaining, becomes 535,300. Okay, now what I've done is I've added this schedule down here, where we take what was given in the problem, the capital balance before we had our various adjustments, then we had the gain on the sale of the inventory which we allocated to the accounts, and so now we've got how that 535,300 actually flows to each person's account. And I'll just underline that so you can see the schedule a little bit more clearly. Okay, so now we've got enough information to make the final journal entry. Okay, so now we drop in the cash that we're distributing, the 535,300, and then we're going to debit the three partners again, and Kendra's was equal to 124,400. Right, Cogley's was equal to 233,433, and my was equal to 177,467. That should equal the 535,300 that we just came up with right there. Okay, now they tell us that inventory is sold for 500,000. I'm going to slide back up. We had inventory on the books for 537,200. So if we sell all of that, we know we're going to collect cash of 500,000. Right? We're going to get rid of our inventory for the book value, 537,200, and now we've got a loss of 37,200. So that takes care of 2A. And of course, we've got to distribute that loss according to the ratio again. So we'll drop in Kendra, we'll drop in Cogley, we'll drop in May, or Mai, I'm not sure how to pronounce it, and we know I've got to distribute 37,200, and we distribute it 3/6, 2/6, and 1/6, so 1/2 or 3/6 of that is 18,600. 2/6 or 1/3 of that is 12,400, and you can do this with a calculator or Excel on the side if you like, and the balance is 6,200. Okay. Okay, next in this case we need to pay off the payables again, and we would debit accounts payable for 245,500, and we would credit cash for 245,500. Okay? Okay, now in this case I'm not going to go off to Excel, but what I'm going to do is do a quick calculation here. Oh, by the way, I guess I need to jot down that loss, and this was a loss too. I didn't put that in before. Alright, if we started with 500,000 and we had 24,500, then we need to get rid of the remaining cash, which is the 500,000 less the 245,500, and that gives us a balance of 270,900. Okay, and then again we need to distribute that cash to the appropriate partners. And in this case, let's take a look at how that plays out. Okay, now in this case I dropped in those losses over here, and instead of adding now we need to subtract, and that's how we come up with the 435 ending balance. Oh, in this case we didn't sell, we sold the inventory for 500,000, I believe. Right, so we still wind up with 435,300, and we have to record it in those ratios. So if we pop back over here, we've got 74,400 to record, we've got 200, 100 to record, and 160,800 to make up the, oh, and this amount becomes 435,300 of the remaining cash. Yeah, it's not the other amount we showed below because we pay off the liabilities, but we had a beginning cash of 180,800, so I miscalculated that earlier. So that becomes 435, and that takes care of the third case. That takes care of the second case. Now we move on to the third case. Okay, now in the third case we sell inventory for $320,000. So we're going to collect cash of $320,000, and the inventory still had that same value of $537,200. So now we've got a a loss of $217,200. Okay, we then need to distribute the loss, $217,200, and we distribute it to Kendra, and we distribute it to Cogni, and we distribute it to May, and that 3/6, 2/6, and 1/6 ratio, and that comes out to be 108,600. Cogli becomes 72,400, and May becomes 36,200. Okay, then again we sell off accounts payable, right? Cash, 245,500. Debit accounts payable. Debit cash, and I'm really blowing this here. We need to debit accounts payable. I'm not sure why it's not giving me the option. I get cash and Kendra. Oh, I'm sorry. I'm jumping ahead here. We debit cash to pay off the accounts payable. Debit accounts payable to pay it off of the 245,500. I just jumped ahead. But there's another entry that we have in this last case, and let me explain that next. Okay, Kendra gets allocated a loss of 108,600. But if we look, Kendra only had 93. So if I put in a loss of 108,600 and put in the rest as well, Cogli had a loss of 72,400 because he shares in 2/6 of the loss, and May has a loss of 36,200. What we wind up is a negative position in the total amount. Okay, so what that means is Kendra is not entitled to 15.5. I think I've calculated that wrong. I think it should be 15.6. Kendra's 108,600. So 15.6 of that has to be accounted for. And how we would account for that is we would put 15.6 back into cash and take it from Kendra. Okay, and then once we do that, we wind up in a situation now where Kendra's loss then only becomes the 93,000. Okay, and we've got 270,900 versus the 255,300 of cash. Okay, so we pay off accounts payable and we can move on to Part D. And in Part D, what we need to do is distribute that cash in the proper ratios, which is going to come out to be 104,100 only to Cogli and only to May for the cash remaining of 270,900. Okay, and the reason why is because Kendra is already wiped away his capital account, so the distribution of the 270 shows up in that amount there. And there we see the dollar amounts. Okay, and that takes us through Part 3, which is all I wanted to cover on this problem. Thanks, everyone.